Welcome to TradeTheMBA.com. This is John. This report is for the 11th of May. Things went pretty much exactly like we thought. I expected to move back up to the 0%. As soon as we hit there, that left a lot of the people who were in potential margin situations to liquidate and sell, and it traded right off from that, and leaving us right about that minus 15, almost 16% for the year. There's that spike up of white MBI that projects more weakness going into this. Short-term buyers, the DOC here, slight increase, and that falling orange gives a potential for, if the orange continues to follow, we could see the potential for a P2 pivot, which it may not happen in another day or so, but certainly has the potential. So we'll keep an eye on that, because this is exactly kind of where we were right back here. For the buildup after reaching the lows that caused a nice little relief rally. So while everyone gets super negative and parabolic about it, those are the opportune times that market players tend to flip the switch and do things. So be prepared for that kind of setup, because it can take place, and as we've seen, can be pretty significant on the turnarounds. From an NQ standpoint, almost identical. In fact, the DSC and BI readings all in line with the same. So pretty clean from there. Didn't even get close to coming back up here to the original 0%, but from where it was on the previous day, it did relatively the same. So performing in relative appearance pretty close to identical. Euro's an interesting one, because every time we've reached this break of the 105, there's been a step in to push things up. How many times it can do that? Probably an indefinite number, because you're talking about big governments and that involvement, and it makes a difference, because we all know the catastrophe that happens below that. And I know they're looking at what banks are going through with the whole Russia situation in Europe, and many of them taking multi-billion-dollar losses from already illiquid banks. And now you even have the Eurozone proposing $25 billion in new bonds to help fund aid to Ukraine kind of situation. So just digging a deeper and deeper debt hole, not too different than what the U.S. is doing. So gold, right there, that was the last positive extreme. We filled all of those. Again, this is a pre-play on what I was talking about as far as deflationary pressures. If you see a rapid meltdown in U.S. GDP, and that, just like we saw in Q1, it was much faster than people recognized. And if there's an acceleration or a continuation in that, you can see Q2 being even worse. And I think that's something that you're seeing in some of the market move, and certainly going to be reflected in gold, because that's not inflationary, even though inflation will remain most likely continuation for some time to come. But you've also seen oil give back, it's over a 10% move. Coming back from oil on the peaks, and it's the same situation. If demand falls off dramatically, that eases a lot of things. Of course, in Europe, just the opposite situation. Ukraine announced that they're shutting down one of the pipelines of natural gas coming through Europe, moving it all to one of the other ones that's away from conflict areas, and that caused a huge spike for European situation. The European situation is much uglier than the U.S. situation has to be, because the U.S. could ramp up if they were only given the regulatory authority to do it. And of course, that's a flight to safety. So the spike in TLT here, which is treasuries, that's just a representation of people moving their money into something where they have safety, even though it's still at negative yields, given what inflation is running at. And the hemorrhage of Bitcoin in that continues, and again, this is not unexpected from what we've been looking at from way back up at 40. We had seen it trapped in this 40 to 39 area, and once that started to break down, we knew that the next spot was 34, and literally gapped right to that 34 and continued, and that leaves that 29 number It's just below here. I think I showed it on the daily daily. I think we can see, yeah, there it is, right there, the 29.5. I don't know if we got that low. 29.7 is what we hit. So fills it beautifully. I mean, you just can't ask for anything better than that. So clean and simple. ETH was performing a little bit better during the day, but as you can see, towards the late end of the day, tail off was significant, but still beautiful from its pink bar read. So very happy with how that performed. And this is probably going to be really one of those culling periods where we start to find out which cryptos have what it takes to survive, which ones actually have some inherent usage just outside of being cryptos. You got to actually be able to do something with them. For a 50K standpoint, we had the nice rally up and it flattened, and that's where we're at right about now. And probably going to see some more basing like that continue on. And again, we're going to see all of these flip outs take place on 5K and then move into the 50K for the readings. Late day, sold off, and it's pretty much based right just below the 4K number. And still puts us above, my expectation was that we would probably move down towards the 38.50 as sort of a baseline number, but slightly higher than that to bounce off of. Would not be surprised. I think that's reasonable, but you can see how that action goes. Let's go back to the beginning of the day, because we had that nice rally up. This got us right up to that low from the previous day, the 0% break that I was talking about. And as soon as it got there, people took advantage, started to exit out of that pre-market. Then it rallied back again so that in the cash live open, they could do the same thing and probably let a lot of people get out of their positions in that less scathed than they otherwise would have been had things remained lower or even gapped down. So a little bit of salvage there. And then once we broke that previous algo 4031 here, we just continued straight down. And then they did another late day run as a secondary opportunity. And that's when we caught this move back. And mostly that's because this was all positive extremes, going all the way back with a little bit more to go, all the way down to 39.76. The secondary one is where we're at right now at the lows. We're in 86 range, so 85.25 is the 0% of this, and that fits within that low. So filling all but the primary jump, and that's pretty consistent. I would still expect that to get filled. It's a matter of when. So we'll wait and see. And as always, things all pretty clean stuff. Like it pretty good. The ranges are still fantastic, and I think you'll probably see a bit more of these basing elements before we get some of these more of these intraday spikes until they finally catch hold, and you'll get some short capitulation or shorts who've just decided that maybe the end has come for the dip, and then they will just cover as well, and that will cause a pretty decent spike. So we'll see where that finally ends up. So far on 5K, though, still short from this particular standpoint. As always, though, continue to look for me on the Skype chat. I will keep putting information and details up as they are warranted. Trade well. We'll talk to you later.